What is good, everyone? For this episode, we're going to be covering market structure. So market structure is going to be either you're going to see bullish market structure or you're going to see bearish market structure. Okay, so this is literally the foundations of ICT concepts. And what bullish market structure looks like is something like this, where you will have a series. So we'll just write it out here. Bullish market structure. All right, so this is what bullish market structure looks like. We can give this a little bit of green. And what this looks like is we'll have a series of we'll have a low, right? So this is your low. We will then have a high. We will then have a higher low. And then we will have a higher high, and then so on, right? So this is your low right here. And then this is your high right here. And then your higher low. And then your higher high, and then your higher low, higher high, right? So this is your bullish market structure. Okay. Then for bearish market structure, what that looks like is you're gonna have it look like this, right? So this is bearish market structure, and we can put this as red for bearish market structure. And what this looks like is you'll have a high, then you'll have a low, then you'll have a lower high, right? And then you'll have a lower low, and then you keep repeating that, right? So you have your high right here, you have your low right there, then you have your higher low, or sorry, your lower high, your lower high, and then your lower low. Okay, so bearish market structure is a series of low, high, higher, low, higher, high, and then bearish market structure is a series. So did I say bullish here? I meant to say bullish if I did. And then bearish market structure is high, low, lower, high, lower, low. So this is what bearish market structure looks like. And guys, just know that this isn't going to be perfect on the chart. You're sometimes going to have things like liquidity sweeps or liquidity, where we'll go like this. We'll have, sometimes higher high, and then we'll have that lower low, we'll go like this. And it's not going to look perfect on a chart. It's sometimes going to just look like this maybe, But in the end, if you're marking out your major swing points, it's still going to be bullish market structure, and you're still going to have that bullish trend going up. Okay, so let's go into the charts, some examples. For example, here we have some bearish market structure on the 1 hour, right? Where we have a series, where we have a high right here. We then have a low. We then have a lower high. And then we have a lower low. And then we have a lower high, lower low, lower high, lower low. And this is a series of bearish market structure, right? And then, for example, for the bullish side, all right, let's try to find just some, bullish market structure. All right, for example here, right, we have a low here. We then have a high here. We then have a higher low put in place. Then we have a higher high put in place. Then we have a higher low put in place, and then so on. All right, so just marking out your major swing points to identify the trend is just going to be super beneficial in identifying, your structure and how you should go on. So we don't trade using this. We don't trade using like trend lines, but it is good for just identifying higher time frame, because higher time frame is always going to hold that higher power. So if we have bullish market structure on, like the weekly, the daily, and 4-hour stuff, you don't want to be fading that on the lower time frame just because we have, some lower time frame market structure that shows we're going to go higher. Don't always remember that the daily and the higher time frame is going to hold that higher time frame narrative, right? But yeah, we'll get more into that later, and when we get into more in-depth ICT concepts. But now I want to show you guys something else, which is what a market structure shift is. So what a market structure shift is really just what it sounds like. So it's when the market either shifts from bullish structure to then bearish structure, or bearish structure to then bullish structure, right? So we have our bullish structure right here. When a market structure shift happens, is when we close below the recent higher low. So if we're in bullish price action and we have a higher low right here, if we have a body closing below the higher low of this candle, then this is going to be a market structure shift. We have a closure below that, and this is a market structure shift, okay? Anyways, this is a market structure shift. This is a bearish market structure shift, right? And then a bullish market structure shift, what that looks like is we'll have a closure above the recent high, lower high. So for example, if we have a lower high right here, if we get a body closing above the recent lower high, then this is going to be a market structure shift, and this is going to be an indication that price wants to move higher. And this is a bullish market structure shift. And then a bearish market structure shift looks like this, and this is an indication that price would want to go lower. Now, bodies are super, super important in telling whether the market is going to be having a bearish market structure shift or a bullish market structure shift. And you definitely want to be relying on bodies closing, because you can get faked out a lot of the times if we get just a sweep of liquidity is what they call it. So for example here, if we have like let's just find an example of a bullish market structure shift. For example here, all right, so we have a high, then we have a low put in place, right? And then once we get a closure above this recent higher low, or sorry, lower high, once we get a closure above that, then this is a market structure shift, and we have then shifted structure to then go higher. And then what a bearish market structure shift looks like is we'll get our swing low. So let's say our swing low is right here, right? We have a swing low right here. What a bearish market structure shift looks like is a closure below that swing low. So then the swing low is now here, right? This is that higher low. Boom. So is this a market structure shift, guys? This is not a market structure shift because there hasn't been a body that closed below this low. So you need to have a body closing below this low for this to be a true market structure shift. So once a body closes below, like right here, boom, now we have a market structure shift. So this candle here, this wasn't a market structure shift. This wasn't a market structure shift. Not until we get a body closing below this is a true market structure shift. And then we can then anticipate price to reverse and then trade lower. Okay? So that is that, and that is what market structure shifts look like, and that is what market structure is all about. Go on your charts, mark out the lows, the highs. For example, here we close above the recent high, the high right here. And once we get that body closing above the high right there on this candle, this is a market structure shift. And just, yeah, look at your charts, mark out your market structure shift, mark out your bearish structure versus bullish structure. And remember that it's not always going to be perfect, but yeah, that's that. Peace out, guys.